Is Tesla setting up for a real reset, or is this just another headline that fades after the first burst of attention? The signal in Tesla that the market may be mispricing right now. As always, this is market commentary, not financial advice, and not a personal trade call. The useful question is not whether the story sounds exciting. The useful question is what would make the setup stronger, what would invalidate it, and where the risk becomes too expensive. Start with what changed. Fairlead's Katie Stockton talks technicals on Tesla and Google. Fairlead's Katie Stockton joins Closing Bell Overtime to talk the technical indicators popping up. Is the latest move in Tesla resetting the story, or just shaking out weak conviction before the next real data point? That gives traders a fresh reason to look, but it does not automatically give the stock a cleaner setup. A headline can create attention in a few minutes. A durable move needs evidence that flows into guidance, estimates, demand, margins, or institutional sponsorship. Now anchor it to the tape. Tesla is moving around what Toyota's earnings say about Tesla stock, and the real debate is whether that changes the numbers or only the mood. The stock was around $428.35, up about 4% on the day. This is where a lot of retail traders get trapped. The first reaction can look convincing because the chart moves before the evidence is fully priced. The better read is to ask whether buyers keep defending the move after the initial excitement, and whether volume shows commitment instead of a quick momentum chase. The proof to watch is more concrete. That only matters if it shows up in estimates, guidance, or cleaner follow-through. If the source evidence is only a story, the move deserves a smaller weight. If the evidence starts changing forward expectations, the stock deserves a different conversation. That distinction matters because Tesla often trades on narrative first and numbers second, which means the best opportunities usually come when those two finally line up. Here is the bull case in practical terms. If what Toyota's earnings say about Tesla stock shows up in estimates, guidance, or order visibility, Tesla's premium can rebuild. For that version to work, I want to see three things. First, the next update needs to support the demand story. Second, margins or operating leverage need to stop getting worse. Third, the stock needs to hold up after the headline cycle cools. If those pieces show up together, the setup moves from interesting to actionable. Here is the risk case. If what Toyota's earnings say about Tesla stock stays narrative heavy without better evidence, the move can fade fast. A recent SEC 4 filing is in the stock for Tesla, giving investors a primary source checkpoint. The invalidation risk is simple. If the stock needs perfect execution while the evidence stays thin, the premium becomes fragile. In that version, even a strong intraday move can turn into noise because the market realizes the story did not actually improve the numbers. For retail investors, the action plan starts with confirmation. Watch for confirmation in the next evidence point for demand, guidance, or positioning in Tesla. My practical recommendation is to treat this as a watchlist setup until the evidence improves. If confirmation arrives, you can reassess the setup with a cleaner risk line. If it fails, the disciplined move is to let the headline pass and wait for the next real data point. Use this checklist. 1. Tesla is interacting with a broader sector rotation. 2. The real issue is whether Tesla is getting a genuine estimate reset or only a fresh headline cycle. 3. If buyers get follow-through volume instead of a one-day reaction, Tesla can stay in leadership. 4. A weaker tape can still overwhelm Tesla if the story does not improve from here. That checklist keeps the decision from becoming emotional. It also stops one viral headline from replacing actual risk control. The bottom line on Tesla is this: respect the catalyst, but do not overpay for a story before the proof catches up. The cleaner setup is not the first candle. The cleaner setup is the moment when the headline, the chart, and the next evidence point all start saying the same thing. If you want another breakdown, tell me which stock or ETF should be next on MarketPulse. Here's the part that matters for an active retail investor. If that improves, the move has a better chance of pulling in durable sponsorship instead of just fast money.
From an estimate lens, the question is whether analysts have a reason to revise numbers instead of just revising language. Now bring that back to the actual setup. If it does not improve, the stock can still move, but the risk-reward becomes much less attractive because the story is doing more work than the evidence. From a price action lens, the key is whether buyers defend strength after the opening reaction, not whether the first move looks dramatic. The useful way to handle this is to separate signal from noise. For the setup to get cleaner, I want confirmation from demand commentary, guidance tone, analyst estimate revisions, or price follow-through after the first burst of attention. From a risk lens, the setup is weaker if the bullish story depends on perfect execution and offers no room for disappointment. That is why the next proof point matters more than the first reaction. The real issue is whether Tesla is getting a genuine estimate reset or only a fresh headline cycle. For the setup to weaken, I would watch for stale estimates, softer volume, failed breakouts, or management commentary that does not support the premium. From a positioning lens, a cleaner setup usually has follow-through volume and fewer failed pushes at the same resistance area. This is where discipline matters. That keeps the decision practical. Respect the catalyst, but do not let one headline replace a checklist. From a fundamental lens, the strongest version of the story needs better demand, margins, orders, or guidance, not only a cleaner narrative.